Imagine waking up one morning to find the dollar in your bank account has lost half its value overnight. Cash machines are empty, supermarkets are guarded by armed soldiers, and the only people still buying property, art, and companies are the same families who vanished from the headlines months earlier. This is not a dystopian film. This is the scenario that some of the wealthiest dynasties on Earth have been quietly preparing for since 2019, and the proof is hidden in plain sight across 9 specific asset classes that have almost nothing in common to the average investor, yet everything in common to those who have survived every monetary collapse for the last 300 years. While the rest of the world argues about interest rates and meme stocks, a narrow circle of multi-generational billionaires has been moving tens of billions of dollars into a portfolio so deliberately constructed that its internal code name inside the most exclusive family offices is simply continuity. Tonight, for the first time anywhere, we are going to walk through the exact 9 holdings that make up that continuity list, why each one was chosen, how they were acquired without moving public markets, and the chilling timeline that ties them all together. Because when the next global reset arrives, these 9 assets will not merely preserve wealth, they will decide who still owns the 21st century. The story begins in a windowless conference room beneath a nondescript office building in Zug, Switzerland in November 2019, where 27 individuals representing 18 different fortunes that total more than $2 trillion today gathered for a meeting that does not officially exist. No minutes were taken, no phones were allowed, and the only record is a single handwritten page now locked in a titanium briefcase that travels with one of the attendees wherever he goes. On that page are 9 words, each followed by a target allocation range: rare earth monopolies, pre-1933 European farmland, deep vault art, Swiss water rights, Chilean lithium deeds, Western Australian iron leases, Singapore data fortresses, rhodium above ground, and Kyoto Protocol carbon indulgences. These are not random luxuries or speculative bets. They are the distilled lessons of every currency collapse, empire fall, and world war that these families or their predecessors personally lived through. The group did not meet to predict the future. They met to finish a shopping list that had been refined across 4 generations. And between March 2020 and the present day, they have executed it with a discipline that makes military operations look chaotic. The first asset on the list is the one nobody talks about yet. Nobody can fight a modern war without near total control over specific rare earth refining patents, mines outside China. While politicians were busy promising to bring chip manufacturing back to America, family offices linked to old European mining dynasties and Gulf sovereign funds quietly purchased the only 2 refining facilities in the Western Hemisphere capable of producing dysprosium and neodymium at 99.999% purity. They did it through a chain of acquisitions so boring that not a single financial journalist noticed: a bankrupt Australian processor here, a distressed Malaysian smelter there, an unlisted Swedish separation technology firm that looked like a chemical supplier. By the time the Pentagon woke up in 2024 and declared rare earths a national security emergency, more than 60% of non-Chinese refining capacity was already controlled by trusts whose ultimate beneficiaries have never appeared on the Forbes list. When the next supply shock hits and a single kilogram of dysprosium oxide climbs past $30,000, the owners of those refineries will not be governments or public companies. They will be the same quiet trusts that finished the shopping list in Zug. The second holding takes us to the rolling hills of Normandy, Tuscany, and the Bordeaux countryside, where something strange has been happening to the greatest vineyards and dairy estates in Europe. Since 2021, more than 400 properties that had been in the same families since Napoleon have changed hands at prices 20 to 30% above market, yet none of the buyers appear in the local land registries under their real names. Instead, the new owners are Luxembourg corporations owned by Panamanian foundations owned by 18th century Dutch stichtings whose current managers all trace back to the same Zug meeting. These are not vanity purchases for rich men who want to make wine. These are the last large tracts of pre-1933 titled agricultural land in Western Europe, land that survived 2 world wars, multiple currency reforms, and every communist revolution because the title deeds predate modern tax codes and cannot be confiscated without tearing up. Treaties older than the United States itself. When paper money fails, the people who own the actual soil that feeds nations do not need to ask permission to eat. The third asset is the one that makes headlines, yet nobody understands. The silent accumulation of what the auction houses now call vault-grade masterpieces. Between 2020 and 2025, more than $11 billion worth of Picasso, Warhol, Bacon, and Monet disappeared from public view into newly constructed, climate-controlled, nuclear blast-resistant facilities beneath Zurich Airport and in the Singapore Freeport. These are not investments chasing the next record at Christie's. These are the exact works that were used as collateral during the 1930s, when Swiss banks demanded something harder than cash from fleeing Jewish families and European aristocrats. The families buying today are completing a circle that began almost a century ago, because when central banks eventually recognize art as Tier 1 collateral again, the only people who will have enough museum-grade pieces in the right vaults will be the same people who accepted those paintings the first time history repeated itself. The fourth and perhaps most prophetic holding is something so mundane it sounds. Insane until you see the contracts. Perpetual water rights attached to Alpine, glaciers and Aquitaine springs that were granted by royal charter before the French Revolution. In 2023, a consortium of family offices paid what looked like absurd premiums for companies whose only business is piping water from mountains that have been melting for centuries, yet the fine print reveals that the concessions are irreducible even in states of emergency and cannot be nationalized without compensating the owners at pre-euro gold parity. When drought and desalination failures finally make fresh water more expensive than oil, the owners of those medieval charters will control the one commodity every army, every city, and every human being needs more than fuel. The fifth asset is the one that powers the electric future everyone keeps promising: hard rock lithium deposits in the high deserts of Chile and Argentina that were quietly ring-fenced through a series of off-market transactions starting in late 2021, while retail investors piled into lithium miners on the Toronto and Sydney exchanges and watched them crash. The family offices went straight to the landowners and offered cash settlements that made the miners irrelevant. Today, more than 40% of the world's highest grade, lowest cost lithium brine that is not already Chinese-owned sits beneath grazing land whose surface rights now belong to the same trusts that bought the rare earth refineries. When the next administration tries to force domestic battery production and discovers there is no secure feedstock, the phone call will not go to Canberra or Santiago. It will go to a law firm in Geneva. The sixth position is the red dust of Western Australia, where billion-ton iron ore leases that were written in the 1960s with royalty clauses tied to the price of steel have been accumulated through a rolling series of put and call agreements that will not appear in public filings until 2028. These are not speculative junior miners. These are the same tenements that supplied Japan's post-war miracle and China's skyscraper boom. And the new owners have already locked in off-take agreements at fixed margins that become infinitely valuable the moment global credit freezes and no one else can secure shipping tonnage. Iron ore is the silent backbone of every rebuilding phase after every collapse, and the people who control it when the steel mills come back online write their own terms. The seventh asset exists only as ones and zeros, yet it may be the most valuable of all. Fully sovereign tier data centers built inside the mountain fortresses of Singapore and Norway. whose physical security contracts are guaranteed by host governments and whose power supply is ring-fenced from civilian grids. While governments argue about digital currencies and cloud sovereignty, the families who attended the Zug meeting now control enough hardened storage to host the entire backup of Western financial ledger systems if the public cloud ever goes dark. When the lights flicker and the banks need to reconstitute account balances from cold storage, there will be exactly 3 places on Earth they can turn to, and all 3 are owned by the same quiet consortium. The 8th holding is so obscure that even most commodity traders have forgotten it exists. Above-ground refined rhodium stored in numbered barrels inside the vaults of Johnson Matthey and Heraeus. Rhodium briefly hit $30,000 an ounce in 2021, before crashing 90%, and while the public moved on, family offices spent the next 4 years buying every physical ounce that surfaced at an average price below $4,000. Rhodium is the key catalyst in hydrogen fuel cells and next-generation catalytic converters. And when the world finally pivots away from battery-only electric vehicles, the existing stockpile will not be measured in tons, but in who controls the only metal that cannot be substituted at scale. Finally, the 9th asset is the one that sounds strangest of all, yet ties the entire portfolio together. Verified carbon removal credits, locked into Kyoto-era, registries that can never be cancelled and are grandfathered under any future climate accord. These are not the voluntary offsets you buy to feel better about a flight. These are the original compliance-grade indulgences issued to heavy industry in the early 2000s that were meant to expire but were quietly extended in perpetuity through a series of bilateral treaties almost no one noticed. When the next financial reset forces governments to monetize carbon liabilities, to rebuild balance sheets, the only entities holding enough pre-validated credits to offset entire nations will be the same trusts that finished their shopping in 2025. Taken together, these 9 assets form a perfect closed loop. The rare earths and lithium power the machines. The iron rebuilds the cities. The farmland and water feed the people. The art and rhodium provide the collateral. The data centers preserve the records. The carbon credits buy the political forgiveness. And all of it sits on land and under laws that predate the modern state itself. This is not diversification in the way financial advisors speak of it. This is the recreation of a private feudal system designed to survive the death of the public monetary order. The families who own it do not need the stock market to recover. They do not need central banks to print. And they certainly do not need permission from elected governments that may not survive the transition intact. And the timeline is no longer theoretical. Internal memos that have surfaced from 2 separate family offices both reference the same phrase. Full continuity deployment, complete by Q3 2026. That is not a prediction of collapse. It is the scheduled end of an acquisition program that began the moment the world shut down in 2020, while retail investors were chasing triple-leveraged ETFs and politicians were promising that inflation was transitory. The oldest money on Earth finished, building an ark that does not need the same ocean the rest of us are still swimming in. When the waters finally rise, whether through debt default, currency debasement, war, or all 3 at once, the 9 assets you now know about will not simply preserve wealth. They will become the new foundation on which everything else is priced. The rest of us will be left holding paper promises that were never meant to survive the storm. The ultra-rich are not predicting the end. They have already bought the other side.